As far as the RBI's launch of new liquidity management framework is concerned in just a bit. And of course, there's another story which is going to be making headlines. But before we come to that, before we talk a little more about what is buzzing in trade, sources in fact tell NDTV Profit that RBI is likely to announce its new liquidity management framework in the coming policy. In fact, Subhana is standing by with all of those important details.
Yes, so sources are telling us that the Reserve Bank of India can actually come out with the new revised liquidity management framework by the end of this month, or largely by the August policy, which is next week. Now, what sources are telling us that RBI usually meets with bankers, economists, and primary dealers, largely market participants, before they conduct the policy. Now, they met with market participants on Monday and economists with last week. What they're saying is that RBI could actually anchor liquidity operations around seven-day variable rate repo auctions, which are the VRR auctions, which is used to infuse liquidity in the banking system. Now, they could operationalize 7-day as this tool, as this liquidity management tool. And also, they would move away from doing long-term VRRs. Like since 2020, RBI has been doing 14-day VRR to infuse liquidity in the market. So they would move away from that and move to 7-day, because bankers believe that this would help banks in order to manage their liquidity and whatever mismatches or incremental outflow that they would have. Also, another thing on the liquidity management framework would be on the bank's push for a fixed rate repo window of 1% of NDTL. Now, banks have been asking RBI to actually do these auctions on a fixed repo window of 1% of NDTL. What that means is that currently these auctions are being done at market determined levels, but now they could be done on the repo rate levels. This could actually help in reducing the volatility in overnight rates. Now, the new RBI Governor Sanjay Malhotra, what we're gathering from sources is that his focus has been on stabilizing the overnight rates. Now, another thing that could be on the radar, that could be introduced in the new liquidity management framework, would be the final launch of SORR, which is a secured overnight reference rate. Now, that is based on the TREPS market rate. This would also be a move away from MIBOR, which is based on LIBOR. Now, MIBOR, which has actually lost its relevance, that is why RBI is introducing SORR. They had mentioned about the introduction of SORR back in the December policy, but now it could be introduced officially in the new liquidity management framework.
Right, and thanks, Subhana, for getting us all of those important details.